You thought the artificial intelligence revolution was just a fun game of buying hardware chips and watching your portfolio go up. But today, the market realized that AI is a double-edged sword that just started slaughtering the software and services sector. And it is happening right as Washington slapped a brutal 15% margin tax on the entire global economy. This isn't just a red day on the screens. It is a fundamental repricing of risk across the entire system. From the massive tariff whiplash crushing the Dow Jones, the pain is spreading rapidly into legacy technology, where Anthropic just vaporized decades of IBM's moat in a single afternoon. We are also watching a violent capital flight out of service giants like American Express and DoorDash, as AI agent fears trigger sheer panic selling. Finally, we track the massive rotation into gold, as the Federal Reserve freezes in the face of an impossible macroeconomic dilemma. Stick with me, and you will see exactly where your cash is bleeding out today, and where the smart money is hiding. First, let's dissect the absolute bloodbath inside the servers. IBM just suffered its absolute worst trading day since October in the year 2000, plummeting a catastrophic 13%. Why? Because Anthropic just announced that its new Claude code can actively modernize and replace COBOL. COBOL is the ancient legacy programming language that quietly runs the entire global financial and banking system. For decades, maintaining these COBOL mainframes was IBM's ultimate untouchable cash cow. The market just woke up to a terrifying reality. AI is no longer just a hardware capital expenditure story about building data centers. It is a software executioner that is coming for the stickiest, most entrenched recurring revenue streams in enterprise technology. Steve Sosnick at Interactive Brokers warned this is exactly what happens when momentum-led sectors violently reverse, and this fear is proving to be highly contagious. A weekend report from Citrini Research sent shockwaves through the market, warning that the AI boom could violently disrupt the broader economy and potentially push the unemployment rate all the way to 10%. We are seeing a vicious, panicked sell-off in momentum software, with sector ETFs dropping 4.8%. But the contagion is now actively spreading to consumer services and payment processors. American Express and DoorDash both plunged over 6.5% today. The street is rapidly pricing in a near future where autonomous AI agents completely bypass traditional high-fee payment networks and human-centric delivery logistics. If an AI agent executes the transaction directly, the middleman's free cash flow goes to zero. Now, layer this massive technological disruption on top of a self-inflicted macroeconomic wound. The Dow plummeted nearly 1.7%, and the S&P 500 dropped over 1%. The market finally woke up to the fact that the administration's pivot to a 15% temporary global import surcharge under Section 122 is not just political theater. It is a hard, unavoidable tax hitting the supply chain right now. Analysts at BMO Capital are warning that this tariff chaos is going to force the Federal Reserve to completely freeze its interest rate policy. You cannot aggressively cut rates when you have a massive inflationary 15% surcharge, inflating the cost of every imported good in the United States. Your portfolio's consumer discretionary stocks are about to see their operating margins completely crushed. With tariffs threatening sudden inflation and artificial intelligence threatening massive structural unemployment, where is the institutional capital going? It is running for hard safety. Gold just ripped higher, surging past $5,240 an ounce as a pure fear trade. Meanwhile, the 10-year Treasury yield dropped to 4.03% as bond buyers piled in. Federal Reserve Governor Christopher Waller explicitly stated today that the crucial March interest rate decision now completely depends on upcoming employment data. The Fed is officially trapped. They are caught between tariff-driven inflation on one side and AI-driven job destruction fears on the other. Tomorrow, you need to watch the President's State of the Union address to gauge just how permanent these tariffs will be. Then, brace your portfolio for Nvidia's massive earnings report on Wednesday to see if the underlying hardware narrative can possibly hold up against today's terrifying software panic. This isn't financial advice. Keep your eyes on the margins. I'm Wilson, and I'll see you tomorrow.